everyone. I hope you all had a wonderful Christmas and are gearing up for an amazing new year. Let's dive into today's trading session. Starting off, I placed my first trade with $500 on a downtrend, but unfortunately it was a loss. Not the best way to start, but that's part of the trading journey. I followed it up with another trade, this time with $1,000 on a downtrend, and again it ended in a loss. It's moments like these that test your patience and discipline. Losing 2 trades in a row can shake anyone, but here's where your mindset matters the most. Remember, trading is not about winning every trade. It's about making calculated decisions and sticking to your strategy without letting emotions take over. Let's keep moving forward. Losses are lessons, and each trade is an opportunity to improve. After those initial losses, I decided to continue with a $2,000 trade on a downtrend. Unfortunately, it didn't go as planned and I faced another loss. At this point, I reassessed the market conditions but stayed committed to my analysis. The next trade was a $4,000 downtrend position, but once again it ended in a loss. This can feel incredibly discouraging, especially after back-to-back losses. However, it's in moments like these that staying calm and composed is critical. Trading isn't about chasing losses or trying to recover quickly. It's about trusting your preparation and sticking to your plan. Losing streaks happen to everyone, but what separates successful traders is their ability to remain disciplined. Sometimes it's better to pause and evaluate before jumping into another trade. The market will always be there, so never let impatience dictate your decisions. After the previous losses, I took a moment to reevaluate the situation. I marked a clear uptrend line on my chart and waited patiently for the right moment. This is where technical analysis becomes a powerful ally, spotting those trend lines and aligning trades with the market's direction. I placed a $10,000 trade, confident in the setup based on the trendline confirmation. And this time it paid off, resulting in a win. It was a significant recovery and a reminder of how patience and preparation can turn things around. This experience emphasizes an important lesson. Never rush into trades out of frustration. Take the time to analyze the market thoroughly, trust your tools, and act when you see a high-confidence opportunity. Wins like this don't just recover losses, they also rebuild confidence. But remember, it's all about discipline. Don't let a single win make you overconfident or stray from your strategy. Following the big win from the $10,000 trade, I continued trading cautiously, keeping emotions in check. The next trade was a $500 up trade, but unfortunately, it resulted in a loss. This was a reminder that even after a big win, the market doesn't guarantee success. The next minute, I increased my trade to $1,000, sticking to the uptrend, and this time it was a win. It felt good to get back on track, but I knew not to let a single win cloud my judgment. Then, in the following minute, I spotted an opportunity in a slight pullback. I placed a $500 down trade and secured another win. This sequence highlights the importance of staying calm and adapting to market conditions. Wins and losses are part of trading, but what matters most is maintaining discipline and sticking to a plan. Even small wins can add up over time, as long as you keep your focus sharp. After the previous sequence of trades, I carefully observed the market's movement to find the next opportunity. With a clear trend forming and my trendline analysis confirming it, I decided to place a $500 down trade. This trade turned out to be another win, adding to the momentum. It's trades like these that reinforce the importance of patience and technical analysis. By waiting for confirmation from the trend line, I was able to execute with confidence and avoid impulsive decisions. Every win, big or small, is a step toward long-term growth. It's important to focus on the process, not just the results. Remember, trading is a marathon, not a sprint. Stick to your strategy and keep emotions in check. Not every trade goes as planned, and that's okay. In the next trade, I went $500 up, but unfortunately, it resulted in a loss. Losses are part of the journey, and the key is to not let them cloud your judgment or shake your confidence. The very next minute, I placed a $1,000 up trade. This time, the market moved in my favor, and I secured a win. Riding the momentum, I carefully analyzed the charts and placed a $500 down trade in the following minute. This trade also ended in a win. These trades highlight the balance between calculated risk and emotional discipline. It's critical to approach each trade with a fresh mindset, not letting the previous outcome, whether a win or a loss, dictate your next move. Keep your focus on the bigger picture and always follow your plan. I placed a $500 down trade, but unfortunately, it ended in a loss. Losses like this remind us of the importance of patience and sticking to the plan. It's easy to get discouraged, but staying composed is what separates experienced traders from impulsive ones. The next minute, I analyzed the market again and confidently placed a $1,000 down trade. This time, the trade was a success and I secured a win. This sequence is a good example of how to recover from setbacks without letting emotions take over. Trading is all about maintaining discipline and having the resilience to bounce back. Remember, every trade is a new opportunity to apply your skills and learn from the market. In this segment, I placed a $500 up trade, but it resulted in a loss. Losses like this remind us that trading isn't always about instant wins. It's about strategy, patience, and staying grounded. The very next minute, I analyzed the market conditions closely, adjusted my mindset, and placed a $1,000 up trade. This one turned out to be a win, showing how sticking to the plan can pay off even after setbacks. The following minute, I switched my focus and executed a $500 down trade. With proper timing and analysis, this trade was also a win. It's a clear example of how understanding the market trends and remaining patient can lead to a positive outcome. Remember, each trade teaches a lesson, whether it's about risk, timing, or emotional discipline. Stay focused and trust the process. I placed a $500 down trade, and it resulted in a win. This trade highlights the importance of identifying strong support and resistance levels and trusting your analysis. It's not about guessing. It's about making calculated moves based on the patterns the market reveals. Even though it's a smaller trade compared to some of the earlier ones, every win contributes to overall growth. Small wins build confidence and show the power of sticking to your plan. As always, I encourage new traders to focus on learning from each trade, maintaining discipline, and avoiding emotional decisions. Let the market guide you, but always trade with a clear strategy. I took another $500 down trade, and it resulted in a win. This was a confident move as I follow the market's trend in respect to the support and resistance zones I marked earlier. It's a perfect example of how even smaller trades can lead to consistent success when you trust your analysis and remain patient. Remember, trading isn't about taking large risks every time. It's about making the right decision in the moment. Wins like this reinforce the importance of staying focused and disciplined. To all beginners, practice on a demo account to build this kind of confidence. Trading is a journey, not a race. Let your skills develop over time. I faced a challenging sequence of trades. The first trade, a $500 up trade, resulted in a loss. I decided to increase the position size for the next trade with $1,000 up, but unfortunately, it also ended in a loss. The market was showing strong volatility, and my analysis suggested a potential downtrend. I entered a $2,000 down trade, but it also resulted in a loss. Losses like these can test your mindset. It's crucial to stay calm and reassess the market. Emotional trading only leads to more losses. Instead, take a step back and ask yourself, is my analysis aligned with the current trend? Am I sticking to my strategy? For beginners, remember this. Trading isn't about always winning. It's about managing your losses and learning from them. Stick to your 1% rule and never let emotions dictate your decisions. After facing a $2,000 loss in the previous trade, I decided to analyze the market carefully before taking the next position. The trend line showed a continued downward trajectory, so I entered a $4,000 down trade. Unfortunately, this also resulted in a loss, further testing my discipline and mindset. At this point, it's easy to feel defeated, but here's where experience and patience come into play. Instead of reacting emotionally, I revisited my analysis, trusting the trend line and market signals. Confident in my setup, I entered a $10,000 down trade. This time, it was a victory, and the trade closed with a substantial win, reversing the momentum of the session. This moment underscores an important lesson for traders. The market rewards patience and discipline. It's not about chasing losses or doubling down impulsively. It's about waiting for the right opportunity even if the previous trades didn't work out. For beginners, I can't stress enough how critical it is to stick to your plan and not let emotions dictate your trades. Build your skills on a demo account and focus on the long-term journey, not just the short-term outcomes. As the session approached its conclusion, I decided to take one final trade, carefully analyzing the market. The trend confirmed a strong signal aligning with my strategy, so I entered a $500 down trade. The trade closed successfully with a win, bringing a satisfying end to the trading day. This final trade reinforces a key principle. It's not about how you start, but how you finish. Trading is a game of discipline, patience, and strategic decision-making. Losses earlier in the session didn't define my outcome because I stayed focused, trusted my analysis, and made calculated moves. To all the beginners watching, always remember to trade with a plan and never let emotions drive your decisions. Stick to your capital management rules and don't chase after losses. If you're new, start with a demo account to build confidence and experience without financial risk. And most importantly, take breaks when needed to clear your mind and maintain a disciplined mindset. As we wrap up today's video, I want to wish everyone a happy Christmas and a prosperous New Year. Let's make 2025 a year of growth, learning, and success. See you in the next video.